The
All right,
event
welcome in.
clock.
Welcome in. If you guys hear me sounding like Daffy Duck, it's because I'm still kind of sick. Just recovering from a little bit of a flu bug. It's just congestion. Luckily, I had no fever. But let's look at the updates for this week. As usual, get started with the macro, and then we'll dive into the rest of the stuff. So, very quickly, Uh, some of the top sweeps from last Friday were Tesla, 470 calls for July. Now, remember that just because this came out on the bull flow, it doesn't mean that you go gung-ho and buy these right now, right? Once again, as I always tell you guys, even though this is for July this year, it doesn't mean you get there right away. More importantly, we are seeing short-term hedges being bought on Tesla in line exactly with what we spoke about. Me and Andrew literally have been telling you about this the entire week, that Tesla will likely see a downward move, spike some liquidity engineering, and then reverse. And I'll go through the chart right after this to show you what I'm talking about. But just take note that there was some premiums that were dumped into this, about $4 million worth. Okay, so it's not that you should ignore it, but it's just something that you keep at the back of your head rather than the front of your head. Okay. Next is these AMD. Remind the dates. These are leaps. Okay, they're for 2026. So this is a 1 year option out. They bought some $100 calls, totaling about $2 million in premium. This once again doesn't mean that AMD can't go further down. It just means that they're taking either share replacement. Somebody wants to get exposure to upside in terms of shares. So there's a high chance that they took this position for that. Okay, so keep in mind. Okay, next thing is your Prime Book report that comes out weekly, which I share with you guys. And you can see here that the main focus this week was two things: Chinese equities, which was led by a lot of momentum buying within Baba, right, which has been releasing quite good information, had positive earnings, blah, 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 right? So Baba is one of them. And then the second is IT, which is infotech. And that we already saw precursors of last week. We already started talking about that last week. During the Sunday prep session, we were talking about how NASDAQ was starting to now slowly come back into the market and start to take a position where it's going to start leading the market because it's been lagging for such a while, right? So remember, we're still confirming this theory. It's not like we are 100% right about it. It's just that we are waiting to see more confirmation that indeed technology is being rotated back into, which would be the usual way things are done, right? As you can see from the sector positioning chart that Andrew shares from time to time, and then I go through the weekly sector confluence, which is the individual ones, which today I'll show you again, right? So remember, we're building that story, just like how Andrew says. So infotech and Chinese equities, that's one of the main focuses from hedge funds last week. You can see China onshore plus offshore has been net bought in 7 out of 10 weeks. And it's the most notionally net bought market on the Prime Book year to date. Okay. Just to give you a little bit of background and a little understanding on how this is impacting the HSI, Hong Kong, the Hang Seng Index, right, which is the main Chinese index, which you should be tracking, right? If you look at their futures and then there's the regular HSI, and you can see that this was that huge release of stimulus that they announced the last time, right? This was back in September or so. And then we came all the way back down to retest the breakout. And then now we're seeing another huge wave up. And so this could easily break this previous resistance here and start heading up into the golden extensions, which will be your 38.2, 23.6 here, and then eventually the 61.8 up here, okay? Now, if you're like me and you don't like guessing which stock, remember, don't try to pick individual equities. You can go for KWEB, you can go for Asher, you can go for a lot of ETFs that will give you exposure into this without you having to pick a stock. And that's my preferred method of doing this, all right? Okay, moving on. Now that you understand about China, is the IT, right? And so let's read into this a bit more because IT was by far the most net bought this week. In fact, the second largest in the last 5 years buying, driven by both short covering and long buying, okay? And you can see that It was led by notional terms in software, which was covered last week's session where I told you guys the Goldman Sachs list, which were all already bought, by the way. That list was posted when it was too late, right? Because I went through every single setup there and they were all no good, except for GitLab, which is the potential for breakout, right? And then the second was semis and semi-equipment, and then to a lesser extent, IT services. Sorry, that was a fucking bird or something. Okay, now, so having said that, IT and China were two of the most net bought here in the past week. And then if you look at the trading flows, right, from the institutional side, you'll see consumer discretionary, which obviously got hit hard last week. Why? Because Amazon had earnings came out and then it dropped 4%, number one. And then you had Tesla, which was also bearish, which both of these make up both huge percentages in the consumer discretionary sector. So you saw a lot of outflow in that in the past 20 days and the past 5 days. But you can see here, majority of the breadth is actually improving now, right? You compare this chart from last week, we had a lot of outflows, and this week we're starting to see the 5-day nets start to come back on the upside, right? Which is a good sign for the market. It means that the market breadth is starting to improve, and it looks like there's a little bit more asymmetric risk to the upside, which is good. That's what we want, right? For bullish positioning. Of course, for the bears, that's a different thing altogether. Okay. Now, I like this little summary from McAlligott, and I think it was this one. Hold on. Not this one. This one. Okay. So I know many of you, if you don't read McAlligott's report, he's a chief cross-asset strategist from Nomura. Okay, now this guy, he's got very good analysis and he's very data-driven. That's what I like about him. He doesn't really put much of his opinions on his reports. He puts the data on his reports, and that's what I like. But here's a little summary of what he, kind of spoke about this past Friday, which I really do think is a nice little way of looking at the market. So you can see that while equities have stabilized recently, the macro risks are still tilted to the downside because of the shocks. And we're seeing this every single week now because of the tariffs, because of this, because of that, right? So there will be near-term strength in economic data, right? But there may be a liquidity tightening, which will then trigger a sharp correction in Q2. So Q2, not now, Q2 is post-March, right? We're talking about April, May, June, okay? So this is something you, once again, at the back of your head, not the front of your head. You got to keep this in mind because remember, as good news comes out in terms of economic data, what will happen is the market will start to price it in. And then as bad news comes out, it will start to price it in too. So this is going to create a whipsaw. But if the main macro headwind, which is interest rates, doesn't get resolved and jobs don't deteriorate as much as they are supposed to, then that's going to create a tighter lending environment, which then you would go back to where you were, which last week I've already mentioned this, will enter stagflation environment, okay? So that will be the market's prime focus as we head into the next quarter. So not Q1, but Q2, okay? Which we spoke about last week. We already spoke about this. So here you can see market participants are hedging against downside risks. And then you're seeing a potential rise in bond demand, which we have seen this past week, right? Which is where you move towards defensive positioning in the next coming months. So what are the biggest risks? It's Trump's trade stance, monetary policy, economic tightening, right? And accelerating adoption, all right? So if you look at the big picture, there is a possibility that the US economy slows down for a little bit, and that will only be priced in a little bit later, okay? All right. Now, apart from this, I wanted to go through, obviously this week you have another week of earnings. I've posted this on the calendar, so you can go have a look at what exactly are reporting this week. The calendar channel is right here. You can have a look at that at your own time. I'm not going to go through all of them because I want to keep this short. And then the last thing I want to go through with you guys is the sector changes, right? So very quickly, you can see basic materials, right, on its way down. And if you go look at the chart real quick, so I'm going to just do this one by one very quickly so that you guys can understand this. Okay, so basic materials first. you can see on a weekly chart, I'm just going to go on the weekly because it's just so much easier. Rejected, losing momentum, potentially has downside. And you can see rejected, losing momentum has potential downside once again. So this is also one of the reasons why I didn't stay longer in that FCX trade that I took. I took profits very quickly because I was like, you know what, it's on the table, let's just take it away, right? Biotech, I'll ignore because I don't even trade this sector and it's just too volatile. Consumer discretionary, look at what happened there, right? It didn't even get up to the previous high regions, right? It actually has lost momentum here. Now, this one is interesting, okay? Because what I think will happen is that we'll get a bounce, in fact, not down way down here, but somewhere intermediary from here, and then actually rally up to complete this cycle. Okay, we haven't completed that cycle. You can see that it can tend to go down and then rally, right? It can tend to go down and then rally. So I feel like consumer discretionary, while it looks weak here, if Tesla and Amazon both get a good liquidity sweep, you'll see this sector rebound quite quickly. So I'm very cautious of this because those two stocks have a very big market cap. And you have to be aware that, you know, that engineering can happen anytime. Consumer staples, we've spoken about this before. And you can see here that it's pretty much at the end of its wave here, right? Pretty much at the end. It has a little bit more to go. And I think Coca-Cola reports this. Coca-Cola reports earnings this week, maybe. So we'll see how this sector performs. But right now, so far, it's got two little rejections at the same spot. So this might move sideways for a little bit before making an actual move. So therefore, this I would ignore. Energy, that's the next big one, right? Now, this one had a nice bounce, short-term bounce. And I think a lot of people went long here, and now they're getting a bit clapped. But if you look at this from the momentum standpoint, it has a little bit more downside potentially, right? Back into this level. So would I want to trade the downside? No. So this is also an ignored sector that I don't want to really take part in. This is interesting, but I wouldn't really want to trade it just right off the bat. This one is actually the best setup so far, right? Financials, this one's pretty easy, right? At the end of its wave, has a lot of downside, right? And let's go have a look at that chart because financials have been very strong. That's the thing, right? Very, very strong. So if really this thing lost momentum here, then what this would mean is that this here is a potential liquidity sweep, right? Then financials come back down, right? All the way potentially back here, somewhere here, right? So this is another good momentum setup for downside risk taking potentially, financials. So far, consumer discretion, basic materials and financials bearish is what I'm looking at, okay? Then comes healthcare, also at the top of its wave, has made a momentum move, XLV. And you can see that, right? Rejected multiple times, potentially has that downside, but you need to clear 145, let's go a bit higher. 145.50, right? Only if you break this and come back to retest it, then only do you have further downside to the 142. Okay, that's the way I would play that. If it bounces here, then you would get a reversal back into 148. Okay, so wait for it to come down, either break down or reject, and then you can play healthcare. But as of right now, nice downside potential. Look at that stretched valuation, stretched momentum, sorry, not valuation. And now looks like more downside. Housing, I'll ignore. It's midway through the move. Industrials, I'll ignore. Midway through the move. Okay. Mining, ignore. I don't trade that. Oil producers, same as energy, right? Very little downside. Wait for the bounce. REITs, I'll ignore. Retail, I'll ignore. Semis, this is interesting, but looks like it has a little bit more downside before it starts bouncing, right? Very little downside, I would say, right? And finally, technology, which also looks like it has kind of reached the downside, right? Utilities midway through the move, so ignore. So you really only have two sectors that have opportunities this week. And what are they? Materials and financials, and both bearish, right? Oh, and healthcare, sorry. These three sectors, literally, right? And those are the ones that I pay attention to look for opportunities within, just from the momentum standpoint. Remember, This doesn't mean that you go gung-ho and just go all in risk on these 3 sectors bearish. Okay. It's just what I'm seeing from the momentum. All right. Now, looking into technicals here, and I'll be done in the next 5 minutes here. So SPX obviously has been climbing this little wall of worry here. And every time it gets down into the 59.20, it has been being bid up very, very strongly. So this is your very, very strong support now. Okay, this area right here, right? If you want to put it in a box, it kind of look like this a little bit. Okay. Now, taking into account that this week and futures opening up a little green here, I can almost guarantee you that a lot of retail went short here on Friday. Okay. Now, yes, they probably wake up on Monday and hopefully they will close out profits. But if pre-market, we get a lot of action that's going to push the price up even higher, right? For some reason, if that happens, right? So instead of it coming back down and rejecting this, right? Instead of doing this, it goes and bounces on this and then continues higher here and then gets that breakout. If we start accumulating above this point, right, this is going to trigger a squeeze. And then that will lead to the market going higher. So this key point here at 6,100 is really going to be interesting this week. And it's going to be the key level to watch if you get there. Of course, 6,000, which was the biggest level that we've been looking for the past 2-3 weeks, it has been like trading between that and this downside pivot. So my main focus this week is if bulls really want to press the action, they would try to get over 6,100 and hold it there. If bears want to be in control of the action, they will try to reject the 6,000 level, which is where we are at right now. And so those are the two only key pivots that I want to play between for this week. It's really simple, okay? If you don't understand that, please let us know so that we can explain it, all right? Now for NASDAQ, you can see that a very similar setup and demand has been coming in very, very solidly at around the 20,600 level, around this area. So very similar setup here for QQQ or NASDAQ. I believe it was, somewhere in this region here where we were looking across, and we are kind of past that region now. So it's the same thing here. This is your key pivot, and this is another key pivot. You break above this and you hold above this, that's going to cause a squeeze. You reject this, you likely come back down again to here. If you bounce above here again, then you likely go back up there. So that's bullish. If you are rejecting here and coming back down to reject this, then you go further down. So understand the structure of this and the way that will play out throughout the week. Okay. IWM, it has rejected this $230 level about 3 times in the past 3 weeks. Okay. So I'd be cautious on this a little bit because interest rate environments, macros, not really supporting small mid caps right now, but you might still see, Trump release news whatsoever, and then, it starts rallying again. So I personally will stay out of this until I get to a point where I'm happy to take some risk here. But right now you're in no man's land, so I don't like the downside risk. Okay, now, elephant in the room, 10-year yield. Broken down nicely. We're moving away from short-term interest rates being bought into. So we had that theme running for a very long time in the bond market. It was a bear steepener theme where people were taking on risk for short-term bonds. Now that risk is being pushed to long-term bonds, okay? And so that's the reason why you're seeing TLT and all the longer-term interest rate premium paying bonds being piled into, because the market's trying to front run the Fed here, okay? Is there something that I need to be cautious about here? Not really. But the bond market's it's been behaving weirdly this past week because it's not pricing in an interest rate cut. It's pricing in an interest rate either stay or hike, which is not something that we actually look for in the bullish scenario. But if the 10-year yield can just go, retrace a little bit and continue its downward descent, I think we'll be in a better spot. The major concern is the dollar. And the dollar has not been able to break down below the 107.30 level. And it seems like we are going to start to consolidate here in between this area, right? Either to break up or to break down eventually. So I think that the dollar is going to be undecided for a little while, is what my view is. And this makes complete sense because of all the news that's been coming out. So all in all, your key thematic plays for this week, number one, China bullish, if you can get a retrace. Only if you can get a retrace, right? Don't go chasing this upside when this wave is trying to push up. Wait for it to pull back. China always pulls back, right? Wait for it to pull back. Come back to the 61.8, 2417, that area, right? And then you can go long. With sectors, I mentioned three sectors: healthcare, I mentioned materials, and the last one was healthcare, materials, financials, right? So you have three sectors to kind of look at, okay, as bearish opportunities because the momentum is fading. And yeah, that's all I have. That should keep you, very, very occupied this week with lots of opportunities, and we're going to see the nitty-gritty in the details with Andrew now. So thank you. Hope that helps you guys. Let me stop sharing my screen.
All right. Let's build on top of that now and jump into the details. So we'll start with SPY. This is the SPY plan for the week. Let's recap last week, as we always do. And then we'll kind of look into this week and what we can kind of come to expect, right? So if we look at last week's playbook, we had said, we had the massive gap down, right? And it took me to the start of this week. Let me go back. So if we go back to last week, right, when we were doing this live, we had this massive gap down, right, on the tariff news. And we started by saying, look, we've gapped down, but something doesn't make sense because we see massive bullish positions being built. And those bullish positions were being built for 6,100 to 6,120. And for SPY, it was around 608, right? And so we were like, hey, be careful this week. Everybody's going to probably try to get short. And all it takes is one tweet and the market could come pushing right back, right? And so if we go look at SPY, we pushed all the way up to, let me move this real quick, right? We pushed all the way up to about 608, right? There it is. So we saw the positions being built. We saw price push up into 608. SPX, I think, got up around 6,100 to 6,120. It was right around the same area, right? Then we rejected that area and we sold off into the back end of Friday. So that brings us to where we are today, right? So if we go look at essentially where positions are going into this week, we see something different. I'm not saying that the market's going to fall, but this is what the data is showing us. So this week's range is 610.54 to 591. Okay, that's just the implied volatility taken from the daily close on Friday. If we look at the positioning for Friday, there was nothing. So we're not going to pay attention to that. But if we look at the week, so this is 5 days of data. So Monday through Friday flow, expiring 5 days from Friday. So essentially this week. We can see the positioning is now to the downside. So 592.50 to 590 on SPY. And if we look at SPX, 59.50 to 59.25. Right? So that is where the positioning is going into this week. If you look at the 30 days, it's the same thing. So, right, pretty bearish. Key levels is obviously going to be like 600, as you can see here. Key level there, we're going to talk about that in a minute. So if we're just comparing this to last week the algorithms were pretty bullish going into the new week, which gave us insight into a possible bounce. This week, the positioning is pretty bearish. Doesn't necessarily mean the market is going to, break down and fall. Just means that there's positions that have been placed that would profit if price were to come to the downside. Now, if we look at the NAMO, we can see that on the short term, it's actually possibility or probability would be to the upside. So again, not saying that we're necessarily going to bounce, not saying that the price is necessarily going to fall further, but just understand the probability would be to the upside on the short term. And then on the main chart, we're just in no man's land. We're basically in the middle. So there's not a lot to look at there. If we go to seasonality, right, I echo the same things that T is saying, right? And we kind of had this big run with healthcare. We had this nice run with energy. Staples had a good move. So where do we go? Finance has already moved. So technology to me is the lagger right now. And where I'm kind of keeping a close eye is to a possible bounce, especially if the market is going to try to make a push into all-time highs, right? And so there's a few stocks that are definitely piquing my curiosity, and Meta and Netflix are both sitting at all-time highs and sitting above their key levels, right? So here's Meta sitting well above that 700 level, right? We'll go into the daily. So you're getting daily closes over that 700 level. And if we take a look at Meta, we can see that 700 is one of those key levels. 750 is next, right? Then we take a look at Netflix, and 1000 is that key level. And we go look at Netflix, and it's sitting above that 1000 level as well. So just some things to pay attention to, right? If we're saying, hey, tech could be, the next thing to move, what could lead to that move? Well, you've got two pretty big names that can make massive moves sitting above key levels. So definitely pay attention to that if the market shows some strength here. That brings us to kind of the full breakdown. I'm not going to get into this nitty gritty stuff right here. If you want to read through it, you can. But I'm going to kind of dig into these key levels here, right? So if we take a look at dealer positioning, so selling pressure at 600, buying pressure at 605. So let's take a look at that real quick. Just load up. So now if we take a look at all contracts here, where did it go? There it is. Right? So selling pressure here at 600 would mean that market makers or dealers are long, meaning they want the price over 600 because they collect the premium. So if price breaks 600, that would create a situation where the market makers would have to sell shares short in order to hedge that risk, and that would push them further to the downside, right? 605 is the biggest level of exposure with all contracts, which means right now the market makers have no incentive to push price to the upside because essentially they're collecting the premium off of that 605. So what that means is the customers went long at 605. So customers went long at 605, therefore forcing dealers to be short 605. Okay. Now, where it gets interesting is if we start to break this down on a week-to-week basis, which I wrote about so you guys can read through it. But if we look at this week, right, 214, we can see that market makers are short 595, which means they want the price below 595. So again, customers are long the market this week, 610, 606, 605, and 595. Therefore, dealers are short. So if the price were to break 600, which we know would create selling pressure, there's a strong possibility that we would push down into this 595 area. And if we break 595, then the market makers have no incentive to push the price over 595 because if it closes below, then they collect all of the premium. Okay. So then we look at the next week, which would be 21. And again, we see this 595 area, right? So 595, dealers are short. 608, which is where we rejected last week. And 615, which we haven't even got to. 610, dealers are long, so they have to hedge below 610. Okay, so 595, again, showing its face. That brings us into the third week, which is 228. And dealers are long 595. So I call this a flip point. So if we were to break 595, dealers would then have to sell shares short to hedge the risk from 228. They would have no incentive to push the price over 595 because they're also short on 214 and 221. Therefore, they can collect all of the premium. Okay. So what's important to understand is that if price breaks below 600, therefore, dealers will have to sell shares short, creating selling pressure, and potentially could push price down into 595. We break 595, then we can come down into the 591 level, which is how the playbook is written, right? So if you take a look here, you can see that 600 is where we're currently at right now with a slight little bounce here in the overnight session. And if we break below 600, that creates selling pressure, which could push price down into 595, which would be your golden pocket from this wave right here. And if you break 595, then you most likely break the golden pocket, which would bring you all the way down into 590 or 591, which is your expected move. You can also see that down here on this dark pool level is where buyers have been chilling. So if price were to break this area, then we would expect price to come down to here. If price holds here off of this dark pool level and off of this buying pressure, then we would look for price to bounce back up into 600. And if price breaks 600, then the selling pressure dies, therefore allowing the market to melt back up into 605 or up into 610, which would be the expected move. Okay, so very important to understand what happens here at 600, what happens here at 595, and how price could get down into this 591 expected move or even this 590 level. Now, I wrote that out in detail for everyone in the playbook here at the bottom. So you have a full breakdown there. And then if you're in T's server, it's also in here as well. Full breakdown with the chart. So you guys have access to that as well. Okay. All right. So let's get into your questions. We got about 30 minutes. Try to get through as many as I can while using the data. So I'll open it up to you guys and let's play through some stuff. Google and crowd. Okay, so Google broke the 190 level. So we had a nice support here at 190. We broke it. It sold off. Here's the challenge now with my Google chart. I now have a long-term target on it. So I have it coming all the way down. I don't know what you're looking for. You could bounce off of this 185 area. I believe this is the largest gamma level. I'm not going to change my charts. So yeah, 180 looks like you have support at 180. So you're hoping that holds. Looks like it'd be like down in this area. Right, it'd be like down here. So you'd have like some support down here. There. So you have some support down there. But I have it coming down way further. So we'll see what happens. I would like to see it over 190 if you're trying to play it short term. So you also have this gap down here. So maybe it comes down to the gap. We'll have to wait and see. Crowd, you've got earnings. So earnings are what? Oh, next month? Oh, never mind, you're good. See, hit 420. I think 450 was next level. Yeah, you've got good levels here. So 400, 450, and 500 is starting to build. So in price discovery, so as long as you stay above this high, I wouldn't be worried about downside. A little bit of a rejection there. So not too bad. I mean, I would hope that you're in the position. It's not where I would be wanting to enter a position. Entering position would have been a close over 400, would have been a good entry. Looks like it's holding 420 so far. Basically 3-4 hour candles just battling there. So I would say if you break this high, you most likely push up towards 450. If you reject here and you break this 420 level, you could come all the way down to backtest 400. So you'd be looking at something like this. right? So it could be something like that potentially, if it doesn't break this high, right? So this would eventually become your stop loss area, right? Like that, right? So something along those lines. Baba, I like a rejection. I think T talked about it as well. I already started to piece this together. So this hit the golden pocket. So again, right, not where I like to enter positions. I think it's on this one. Yep. So essentially, right, you had this established low, you liquidity swept it into the golden pocket on the long term on the weekly, made this move all the way up, hit the golden pocket here, right there. So now I would be looking for a retrace to find a entry on a higher low, right? So that's what I'd be looking for. Biggest exposure level is 110 right now. So again, right now, right, 110 is your biggest level, and then 100. So as long as it stays below 110, it's okay. If it breaks 110, then you break the golden pocket. And if you break the golden pocket, then you go all the way up into the high, right? We talk about this every week. So 110 would be the key area here. If it breaks that, then I'd look for it to go all the way up into this high here and then potentially breakout, right? So I would like to see a rejection here. This would look like a liquidity sweep if we got it, right? So it's kind of your range here. Right now, I think it's sitting around 103 something or 107 right now. It's around 107, so it's like right up here right now for open. So I'd like to see it come back down and then break this and then make a move back down into this area to see a better entry. But we'll be watching that 110 level. Every day. Baba, I trade SPY every day. AXP. AXP. You could say bull flagging here. So broke this range. Now it's consolidating above it. Still just doesn't look like it's giving any downside. Only way I would short this if it came back into this range, and then this would look like a long-term liquidity sweep. Other than that, I wouldn't try to short this at all. Big wall at 320. So still struggling with that 320 area, but essentially this is like a bull flag here, right? Right, something like that. So it's just bull flagging here, and you're looking for that breakout off of this wave, right? Over 320 would be essentially what you're looking for. Pretty easy one. Rest in peace, my AMD 2026 leaves. Thoughts on Reddit. Yeah, maybe. I'm long term on an AMD, so Reddit, I think pushed higher. I had it short and didn't work out too well. Yeah. Yeah, I got stopped out of this. It's in price discovery, right? Yeah.
Yeah, this has been a pretty strong name for the past month or
I was
so.
gonna say I think they had a good is what earnings on the 12th. So might be priced in, but again, it's earnings, so it's 50-50. So not where I would be looking to be a buyer personally.
Yeah,
So,
absolutely
but
not.
short definitely didn't play out. So, you win some, you lose some. Um, with earnings 180, yeah, there's no data on this. This thing's already blown through everything. There's been no resets. So it's price discovery. You got earnings, take your shot 50-50. Your guess is as good as mine.
Yeah, there's no real planning here.
Adobe 450 calls for tech rotation. Adobe. Definitely not a name I trade a lot. So, I'll give it my best.
Its freaking premiums are nuts, bro.
Well, I just don't like that there's not a lot of flow.
Yeah, that too.
So that's as a data trader, I need data to be able to break down the information. It does look a little bit of a liquidity sweep here. I had it coming down to 395 to 360, which it hasn't yet. It looks like it's still trapped in between these two levels. So I wonder if those two levels are still there. Adobe. So support at 400. Support at 400, and it needs to get over 450. The biggest exposure is 500. So 450 still rejecting there. That's 450, 400. So 450 still there. This is down to 400 now, which is where it bounced. But that's not gamma resistance. It's actually support. So this could be a liquidity sweep, right? This would have been your established low. You then took this low out, right? Sweeping liquidity. Didn't quite come down to the golden pocket, but maybe. I would like to see it start to break above 450. And then from there, it would be a push up into the golden pocket. 500 would obviously be the first target. So I'd be looking for, right, a push up into about 507 to 521, which is pretty in line with that gamma level at 500. So not too bad. Again, if this low holds, then I would look for a push up. Oops, I meant to put the box there. Right, put the box here. Then this would be the target area. Right, and so again, right, very similar to the move that happened here. Right, you had a low here, you swept the liquidity there, and then you reestablished above it, and then you made the push to the golden pocket. Right, and so same exact situation. Right, pushed up into the golden pocket, and then you rejected. So nothing's really changed. It looks like it's doing similar moves. Same thing here as well, right? So if you take this one and you go off of this low, right, and you go to the high, it rejected the golden pocket again. So maybe get the same. I mean, maybe if it gets over this 450 level, it pushes up into 500 and then up into this golden pocket, then I would watch for a rejection there if that happens. So looks like it's still slowly working its way into this golden pocket though. I think also wave structure wise, you got 1, 2, 3, and then this would be 4, and then you'd come down and that'd be 5, and then you'd reverse. Possibly. If you're not trading SPY, what else do you look at in the market? Tons of shit. I mean, I post it all the time. Show you guys. NVIDIA. Uh, told you guys about NVIDIA yesterday. I was in Zillow. There's that trade. Profiting nicely on the call side, put side not so much. Firm. Again, profited nicely on that side. Not so much on the put side. I was in Baba. I already showed you guys that one. That one was profitable. I was in Lily. I already showed you guys that one. That one was profitable. I mean, I can go on for days. I'm not going to go through everything. Docu. Docu is going to be an earnings play now. So you have earnings here on March 3rd. So the question here is it going to break this consolidation? Right? You have this consolidation here. Right? So you have this consolidation here. You still need to break over 100, which it hasn't given you, right? If you go and look at Docu, see the big wall here at 95. I guess 100's gone. So 95 is now your biggest wall. So looks like it rejected 95 last week. Still watching the low here. If it breaks that, I think it could come down into this golden pocket. was kind of my concern when the alert came out, was I had this potentially coming down to the golden pocket. Um, and you got to get through this order block here. So I think the question is, is it going to continue to consolidate here, or is, earnings going to play a role? It's hard to say. Um, but right now it's just trading inside a box as it is. VITL. VITL. Looks like it's coming down to a golden pocket. So I would just go like this. Boom. Boom. And I'd look for entry around 33 to 32. I doubt there's flow on something like this, but I could be wrong. Yeah. I mean, it's not much, 20,000 to 45. Not going to pay attention to that. So if you're long term in it, this could be a nice consolidation. If you're looking for a bounce, I would say around this 33 to 32 area would be where I'd look for. SLB. SLB. Not a bad place to take a shot. So again, nice liquidity sweep here, right? Established low, took out the low in the golden pocket on the weekly. So, I mean, I would use this as my stop loss. And then I would look to see if you catch the reversal here. But this isn't short term. This is a weekly chart. So again, I don't know what your plan is here. Rich is usually long term, so I would assume he's probably looking for something long term. But yeah, it's in the golden pocket here on the weekly, so could be a nice bounce here. You could also just draw a trend line here and wait for the trend line break if you wanted. Uber.
So this one is all up in Twitter sphere news.
Here's Uber, and Uber has done exactly what we expected it to do. So, right? We talked about Uber. Here's our risk to reward. Here's our target. And so far, so good. So question would be, is it going to break over 80? And if it does, then you're looking for more upside, right? There's your 80 level right there. So far, so good. Congrats if you took it. If you didn't, no worries. Potential head and shoulders if it does reject this 80 level, though. So be careful. T, what did you want to share about it?
Oh no, I was gonna say this is all up in Twitter sphere right now. Everyone's
Oh,
talking
yeah, everywhere.
everywhere. So just be aware if a lot of people are talking about it, then it's just something you gotta be cautious about. That's all.
Yep, absolutely. So this would be the area I would definitely be paying attention to. But if you got into it where we talked about, which was 65, you should be in the profits.
Yep.
So
Oh,
what
and
did you mention
Ackman.
about NVIDIA yesterday? Yesterday? I didn't say anything about NVIDIA yesterday. Did I? I don't remember saying anything about NVIDIA yesterday. Last week, I said a lot of stuff about NVIDIA. Snap, Palantir, X for the win. June SLB 55, I think is too close. Those are weekly candles. So if you just take this snapshot right here, this is November to February. 55 is up here. So maybe, but you need to clear this area. If I probably turn on order blocks, I'm guessing you probably have an order block holding price down. Yeah, all this right here that you got to clear. But you got a nice little bullish order block right here that would play a support, right? And push price back up. So, right, this is where you got to go into smaller time frames and start to dig into your trade ideas, right? So it could come down into about this area, and then that would put you into the order block, right? And then you get your bounce here. right? And so first target, 49 would be the extension target off of this wave. So then if you wanted to go long position, you say, I'm going to enter down at the golden pocket. Target is going to be extension. Stop loss is going to be golden pocket low, right? Or you can go lower if you want, don't matter, right? And then you'd be looking for something like that. First target is going to be the golden pocket, which is going to be this area. Second target, third target, fourth target. Snap. Okay. 9 minutes. So I'm going to try to knock out as many of these as I can. It's not bad from a risk to reward standpoint. You got 2 order blocks down here. Playing a support. You still have never hit the golden pocket up here from this wave. So there's still plenty of potential for this consolidation to break out into this area here. It looks like 10 is probably going to be your support down here, right? So if you come in here and you hit snap, right? 10 is kind of your we're fucked level. So if you break 10, I'd be very cautious. Looks like exposure up here at 15. So it doesn't look bad here. I mean, as long as it stays above 10, I think you're okay. Right? So if we went like this, right, to the golden pocket, we said 10. And there's actually the gamma resistance is 15. So if we want, we could go all the way to 15. Right? That's kind of what you're looking at here. So it's not a bad place to take risk, essentially. See what the weekly looks like. I like weeklies better, by the way. So, yeah, you can see how it's just kind of holding in this area. So, buyers have kind of established themselves here. So, I'd be waiting to see if this is going to make a push to the upside. Palantir is a tough one. I mean, valuation wise, it's completely fucked. It's in price discovery. So, I think, again, very similar to Reddit. Do you like it? Do you like the risk here? Does this look like you want to buy it? Are you trying to short it? If you're trying to short it, I mean, what are the risks if you short it? It's in price discovery. So there's, right, it's already broke through everything because it's just absolutely exploded. So I think, again, it depends on what your plan is here. If you're going to short it, I mean, use the high as your stop loss and pray that you got it right. Price discovery can go for pretty much fucking ever. So, till people believe that there's no more value in it. So again, if you're gonna try to short it, I would use the highs as my stop loss, or I would look for a consolidation maybe of some sort. But again, it's really, really strong name right now. Now, is it completely overvalued? Most people believe it is. But that hasn't really done anything. So Eggs for the win. June calls. PayPal long call for April expiring 85. PayPal is, I think it has a little bit more downside in my eyes, but so I have it coming down to the golden pocket down here. I'm gonna get rid of all this shit real quick. There we go. So broke the consolidation here. Broke 80. It would have it coming down into the 60s. From a wave structure standpoint, again, that's how I look at things. So it did break over the stop loss area for that trade, but then rejected the 94-ish area. And so I would have it retracing back down unless something changes. It does need to get through. Yeah, not a huge fan of these. 80 is definitely the key level here. So it needs to get over 80. So this is done. We get rid of that. So 80 is the key level. You need to get over 80. And then if it gets over 80 and gets back in this box, then this can look like a liquidity sweep. Right? So if this can get back into this range and make support, then it looks like a liquidity sweep and you make a move back to the highs. If it rejects getting back into this box or consolidates below the box, then it might break down and work its way on this retrace here. If you're looking at it on a shorter time frame, you can use this wave, right? That would bring it into about 69 to 65.
Yeah, I'll do an analysis on both Uber and PayPal today for both groups.
Cool. Appreciate that. So that'd be kind of what I'd be looking at there. Agman also revealed his position, lagging news, so ignore it. Yeah, probably going to get people hyped and he's going to sell some for profit. SMCI has earnings. Nice breakout here. I think I posted a chart on it. Bounced right off of the golden pocket. So here it is again, right? So you have your established high and your low. That's your wave. You retrace back, tap the golden pocket, and then your bounce. So short-term target would be about 40 to 42. Then a break over that would push you into the high at 48. And then extensions would be 56 to 66. That would be your targets based off this wave, right? So if that's your wave and this is your bounce, right? That's your first target, second target, third target, fourth target. So it's going to come down to earnings, though. I think it has earnings on Tuesday or Wednesday, right? Yeah, Tuesday, the 11th. So it's going to come down to that. If those earnings are, surprising, then might be. Looks like it's got a lot of information here. Exposure all the way up to 50. So wouldn't be surprised to see it go upside. 40 gets over 40, it gets more support. So over 40 and then 50. So not horrible. Would definitely be, I wouldn't be surprised if it pushed up into the, like, here's 40 right here, right? So 40's right there. But again, it's earnings, so it's 50-50, so it doesn't even matter what I think. And then 50's right here. Right, so 40 would make a lot of sense. And then if it breaks this area, then I think 50 is possible there with a good earnings. I would need those 55s to get to 48 by the end of March. Thanks for your option to calculate. Yep. Yeah. ON. Yeah, so we posted about ON on the long-term reports. This looks like a liquidity sweep to me. So I would be careful here. Established high, sweep that high, reestablish inside the range. I would be watching a break of this low. So this is why I like to put things in boxes because it's easier to evaluate them. Let's take a look at this on a longer time frame. Yeah, so I mean it's had a massive move with really no real pullback. I think you have earnings on the 10th, so Monday. So that's going to be a deciding factor as well. So good earnings pushes it higher, bad earnings, maybe you get a real pullback here. What's your implied move on this if you're going to play earnings? If you guys are going to play earnings, you need to understand three things. What is the implied volatility of the contracts that I'm buying? What is the implied move for those contracts to hit profit? Right? And then what is the guidance? So your expected move on earnings is, let's see, it's taking a second. 12.8%. So they're expecting a 12.8% move. So then your question is 12.8% is essentially down to about 49 or up to about 63. So that's what you need for contracts to not get crushed. right? Depending on what side of the trade you're on. So you can do that for any stock that has earnings. So if you're going to play any stock on earnings, like let's say you're going to do SMCI, right? That was the other one that was asked that have earnings coming up. SMCI expected move on this earnings, I'm going to guess 22%, up 17. So, and then DocuSign was another one, right? So you guys should be looking at these if you're going to play these things into earnings. This one is 12.8%, right? So make sure you guys are paying attention to those implied volatilities on those contracts. Okay. All right. Well, I don't have anything else, guys. So I'm stoked that we didn't gap down massively, so we actually get some clean levels this week. So we'll be watching it. I'm going to be watching that 600 level, break below 600. I think we get that nice push down, give buying opportunities. What
Yeah.
I'll be looking for if that happens is for the algorithms, right? If this happens, I'm looking for the algorithms to go bullish back up into this area. I'm looking for the net flow to show call buying as price falls. And I'm looking for the NAMO to push lower, giving me a better risk to reward from a market sentiment standpoint. Okay. So that was the only other thing I didn't go through. So real quick, I'll just show you guys. Right. The net flow, which is all the options flow on the day. If we look at it over the course of 5 days, when you see a pullback in the market, the first thing I like to look at is where's money moving. And so you can see as the market pulled down, they continued to add bullish positions. So if we come down further, right, I'd be looking for them to add bullish positions, which then would give me insight, right, that the market is going to bounce. So, and it also tells me that market participants are not scared, right? So even though that we sold off on Friday, they were still buying positions. And so far overnight, we have a slight bounce, right? So maybe they knew something, maybe they didn't, right? But that gives you insight into what are all of the participants in the market kind of positioning for. Okay. And so we look at right now, let's take a look real quick. SPX, black, bull. We can see that it looks like they might have known something. So just based on this wave, we would come up to about 60, 66 to 60, 74. Right? And then we'd look for a potential rejection there. Right? More downside. So we'll see what happens tomorrow and going into this week. But so far, so good. So other than that, I don't have anything else for you guys. So I wish everybody the best. Hopefully you guys kill it. If you guys have questions, feel free to reach out. And with that, I'll talk to you guys tomorrow morning. Look at this. This is also a golden pocket bounce on a shorter time frame. Look. Boop a doop a doop a doo. Doop a doop a doop a doo. Doop a doop a doop a doo. Doop a doop a doop a doo.
Thank you,
And
guys.
you've got the bull flag right above, like right below all-time highs building or whatever this consolidation is. Like we blow the roof off this thing and tech starts to rotate, it's going to get real wild real quick. So, all right, T, you got anything else to add?
No, not at all. We'll see pre-market action and then we can add or anything else.
Yeah.
But the video for this recording will be out like in an hour or so. That's about it.
NAMO needs to go oversold on deeper on the short term and more on the longer term, which it's not there yet. So if we were to get a move further down, it would position really nicely. As it stands right now, short-term bounce makes the most sense. So we'll see.
Yepers.
All right. You guys all have a good one, and I will talk to you tomorrow morning.
We'll see you in the morning. Peace.
Later.